Mike, Henderson Far East Income Limited. Let's start broadly. The region has been performing quite well recently. Why is this?
It's a few things. I think I said at the beginning of the year that I thought that the environment for Asia and emerging markets in general would be better as we went through this year than it was through last year, mainly because I think the distortion of QE, which has favoured developed markets over emerging markets, would ease with the tapering of QE. And that's kind of manifested itself. So people have now started to focus a bit more on growth and the sustainability of growth. And I think that's where Asia benefits. So we've had the valuation discounts as well, and they've started to close a little bit. So yes, generally the environment looks a bit better, but there's probably a bit further to go, I think, on that trade.
India was perhaps once regarded as the powerhouse of the region, and there have been a number of structural issues that have held back its growth. It has a new Prime Minister, Narendra Modi. Do you find new opportunities there now?
India is a very interesting market. In some ways it's much better positioned than China is, both in terms of the makeup of the economy, the demographics, etc. But it's been held back, as you say, by inefficiencies in infrastructure spend, bureaucracy, etc., etc. So any change of government where that potentially could change and they could unlock the potential is going to always be interesting for us. The problem we have, of course, is that the market's generally pretty expensive. People have priced in that better environment expectation. And the chances of actually getting yielding equities there are pretty slim. We do find some opportunities, and for us in particular, the state-owned enterprises and the reforms that are taking place there, and some of these are generally cheaper than some of the private enterprises. So we have made some investments in the state sector, Coal India being a prime example of that, which will benefit from these changes, but we're probably not getting as much exposure as we would like, I suspect.
China. The economic rebalance is in full swing. How have the macro numbers been in this regard?
The macro numbers have started looking a little better. There has been some micro stimulus, if you like, so some measures which have been aimed at certain parts of the economy which have been lagging, and that's meant the GDP numbers have picked up a bit. I still think there's too much emphasis on these macroeconomic numbers, and for us it's much more important of what's going on at the corporate and the company level, and that's where I think the opportunities lie currently. The SOE reform, trying to make these large monopolistic, in a lot of cases, companies much more efficient in terms of management quality and their strategies and etc. is an opportunity which we can make a lot of use of. An example there would be PetroChina, which historically has spent huge amounts of money building up the gas and oil reserves of China, but not necessarily making lots of money out of it. But now they're focusing much more on profitability, less subsidy in terms of oil prices and gas prices going forward, and we think that'll lead to much higher revenue growth, much higher cash flow growth, and ultimately higher dividends.
Finally, Mike, you use option contracts as a bit of a portfolio strategy to boost income. With dividends in Asia up around 10% over the last quarter, are you using this strategy less?
We're not using it less, we're just getting paid less for doing it, because generally markets are are moving higher, and generally that means that volatility is lower. So we still see opportunities to write options. It just means that the premiums we get for writing those options are less. But obviously on the other side of that, as you rightly say, dividends in Asia are a pretty strong theme at this point. So we get less option premium, but we get more dividend growth from the companies we invest in. So when you combine those two, it's still a pretty smooth trend.
Mike Kerley, thank you.